Good afternoon, ladies and gentlemen, and welcome to today's Stock Market Brief Show. Look, I found something very interesting taking place that I know not a lot of people aren't going to catch, and it's something that hasn't happened since late into 2021 when we started to go into 2022 and a bear market started. Now, I'm not calling for a bear market to start, but I will show you that when this signal hits, we have seen weakness in the market. So I want to prepare you for what that exactly is. Today, we did have earnings after the bell. If you managed to beat to my live stream, I was live for the bulk of the trading session today. We had Tesla report, which is currently up after a slight slip. Still room to go over here to its upper implied move. We had Meta report, and they saw a initial shot to the downside, but later then recovered, and now they're kind of rather unchanged on the trading session in the after hours as it stands right now, floating slightly higher. And then we had Microsoft, and they reported, and the market did not like what they had going for them. So we're seeing some sell-off, maybe around down 5 to 6% so far in Microsoft. What does ES look like? Let's take a look at some of the futures here. Futures just opened there at 3 Pacific Standard Time. As it stands right now, we're looking at ES. We still see the higher high and the higher low. That's positive. In the last couple of trading days, price action's getting very tight after the initial reaction of DeepSeek. So price is consolidating here right now. If we take a look at NQ, NQ is also still seeing its higher low and higher high, and we're getting price action rather tight. Something interesting taking place in the small caps, which is the ready. You can see here that there's been some small doji type candles or indecision type candles taking place here, indicating that momentum may be slowing as price is flagging. So if we start breaking to the upside, look for a retag of that 50-day moving average. I apologize. I couldn't build out a chart deck fully today because I'm watching my child and he's kind of just playing around right here. So if I start to mumble on, just be aware that I'm also watching my child here as I'm talking. If we take a look at NVIDIA, is another big player that the market has been paying very close attention to. Today it was down. It was just an inside trading day after yesterday's kind of rebound, down 4%. In the aftermarket session, we saw a nice little pop up, and that is gotten faded just a tidbit. Hey, you want to say hi? If we take a look at the 11 sectors that make up the S&P 500 over here, consumer communication services led the way. Tech was down on the bottom, and real estate as well. S&P 500 was down about 0.5%. NASDAQ was down 0.5%. Dow Jones down 0.5%. Volatility was slightly elevated. So it was a pretty rough day in the markets. But overall, Jerome Powell came out. We managed to get through earnings. Was the Fed like very, very hawkish or very dovish? Not entirely, right? The market looks like it's pricing in. The market looks like it's pricing in about 2 more rate cuts so far for the year. We'll see if that changes, if inflation rises. It's all about the data with the Fed. Hey, buddy, give me a second here. Holy moly. Okay. Give me a second. There you go. I'll lift you up. There you go. Calm down. Do not fall. Holy moly macaroni, people. The things that I do. Okay. All right. So where was I? Yeah. So that's what the Fed said. If I take a look at the conditions of the market right now, we are in positive gamma territory. We slipped slightly under, which saw a little spike in the VIX. I'm going to just call this what it is. It is positive gamma, but we are rather neutral as it stands right now. So just be cautioned that, hey, we can very easily slip back under and volatility can easily increase. So this is just kind of a pause. The big level to get over is going to be 6,100. The level to watch out if we get below would be 6,000. Those are some key levels right now in the market from a gamma perspective. If we look at the direction of the 5-day moving average on the trend changer screen here, we see that the 5-day moving average is declining on the SPY, the Qs, the IWM. We are rising still on XBI and the DIA. And you can see semiconductors trying to rebound, trying to base out, but we're still below the year-to-date anchored volume weighted average price and a declining 5-day moving average in this current moment. Let's take a look at some of the expected moves going into tomorrow's trading session. First and foremost, if you managed to watch the video yesterday, I posted it on Patreon. That was for free members and paid members. They could see it on there. I didn't feel like doing the thumbnail and the chart deck and all that stuff. Been tied up, been busy. It is what it is. we came back into the lower implied move. That's what we talked about. It's very common to see that type of price action. Let's take a look here. Yeah, so we're still above it in the after hour session, but you can see we came into it and we started bouncing from those levels. It was in confluence with the lower daily implied move too as well. So the market's doing what the market priced in. Tomorrow's daily move, we have about 606.80 to the upside, 596.82 to the downside, and some wiggle room there in those zones. Those are both the daily implied moves by the options, and then also the VIX daily implied move too, which is a move derived from the volatility index. If we take a look at the Qs, the Qs have a much wider range because why? Well, we just had some big market cap names report. And on top of that, coming into tomorrow's trading session, we have Apple to report as well after the bell. What did Qs do? Came in, sunk down to the year-to-date anchored volume weighted average price, and doodled around the lower weekly implied move. If we go ahead and take a look at the IWM, but first, these are the daily implied levels. So if you want to screenshot that, put them on your screen for tomorrow. That is what the market's handicapping as forward-looking risk. We're below that declining 5-day moving average in IWM. You can see here, IWM came down to this lower level. What is that? I'm going to go to the daily time frame, and I'm going to remove these drawings over here and show you that specific level. This is very interesting to me. The price action is pinching between the high and the low point, flagging out right here. So if we can start breaking above it, that could be a good sign for small caps. But right now, we're kind of just pinned in no man's land as it stands. Going into tomorrow's trading session, like I said, Apple will be reporting after the bell. We're looking at roughly a $10 expected move. I will try my best to go live. I do not know if I will be able to, but I will try. Now, let's get into what I was talking about earlier about something that we haven't seen since 2022, and that has to do with the put to call ratio, applying a 10-day moving average to it. And the last time we talked about it, when it was down at these levels, we said, hey, the times before that, the market fell decent, right? It fell almost 10%, then 6% here when it started to pick up. And over here, we just gave the warning right when it came into it that, hey, this is where the market's pulled back before. Well, the market pulled down 4.6%. Now, we're starting to cross through a pretty significant threshold at 0.8. This level, like I said, has not been seen since 2022. Once it crossed underneath it and it crossed back above, that has been known as somewhat a sell signal in the market, and it led to some extreme sell side. But what happened in the past prior to that? If we zoom out even further, you can see that there's been many signals that we got below it and crossed. One very key one was going into just before the pandemic. Now, once we had the QE bazooka, what happened at the other times it took place? Well, guess what? We actually saw the market dip here. We saw the market dip further here, dip further here. We saw it dip and see some volatility there. And even here, we saw it dip as well. And that's after the 10-day moving average of the put to call ratio crosses under and crosses back above. Now, this has not fully crossed back above by any means, and this is not updated for today's trading session, but I wanted to just put that out there and let you all know that this is some extreme bullishness going on via the put to call ratio. And if it starts to turn around and cross back through, that right there, throughout history that I've just shown you, has not been the greatest sign for the overall markets. Hey, I got to get going. I hope today's episode helped you out. I was going to talk about this chart, but it's not important as much as the other one. I'll see y'all later.